So good morning, everybody. And I want to pick up now on Chapter 13, Part 2. This is where we left off, right? And I kind of showed everybody that a 50% plus or minus change in sales due to leverage results in 100 plus or minus 100% change in earnings before interest and taxes. So I want to continue with that now. Now, there's a equation called the degree of operating leverage, abbreviated DOL. And all they do is take the change in each that we saw previously in that slide and come up with a ratio here. Everyone can see that, right? So as long as DOL is greater than 1, you have operating leverage. That means, obviously, in this case here, it was 2, right? 100 divided by 50 is 2, right? So we have leverage. So everyone can see that here in this simple example, right? With simple math, you can see that. All right, now there's another way of, even though there's a simple equation, there's always a hard equation, right? And here is the hard equation to get the degree of operating leverage, and that is at a base sales level. So in our case, the base sales level was 1,000. Let me go back. Everyone see right here? Here's the base sales level, 1,000. Okay? And you have this equation, and you just pop in these numbers here. And this is a nice example they show you. Here's the base sales level. Here's the price, the variable cost, the fixed costs. And of course, you come up with the same number. Okay, so it's not as difficult as it looks, but it's something you gotta take into account. All right, so we'll jump over this slide. You can read up on Adobe's leverage, how Adobe has leverage. All right, so here's another example of operating leverage, and this woman named Cheryl. She has posters, and she's trying to see what her degree of operating leverage is, right? And she's obviously greater than 1. So, go over this example and just pop the numbers in here, and you can see her degree of operating leverage. And here is the chart for her example. And you'll notice it comes out to 2.2. All right, so on to number 2 now. We're finished with the degree of operating leverage. Now we got to talk about financial leverage. First, I got to take a cup of coffee. All right, so financial leverage is the use of fixed financial costs. We're going to magnify, again, we're going to do another magnification to magnify the effects of changes in earnings before interest and taxes on your earnings per share. So you'll see once again we end up with a similar mathematical problem. All right, so here's an example of Chen Foods, an Asian food company, expects EBIT of 10 grand, and they go through this whole thing with a bond. Now a 10% annual coupon means that it's paying 10% a year interest. So it would be 10% on a $1,000 bond, let's say at par, would be $100, right? So they got this. He's got this whole makeup of bonds and stocks here. All right. So once again, this time we start from EBIT. The other example, we finished at EBIT. Now we start at EBIT and work our way down to earnings per share on the income statement. So notice there's a 40. Here's the base, right? Notice there's a 40% up or down change, which results in a plus or minus 100% change in earnings per share based on some of the leverage we have. We basically have stocks, and here's the interest on the bonds, right? So you can see we have leverage here too. And you just simply go through these numbers, and if there's anything that's a little unfamiliar to you, just email me. So here's the ratio for the degree of financial leverage again. And again, if it's greater than 1, there's leverage, and you just do it. And of course, there's going to be a harder equation for this, right? So anyway, it's 2.5, so you do have financial leverage. And we have another example here that's long-term borrowing on a degree of financial leverage. And you should work your way through these examples. Okay, so you notice if you pop some numbers in here, you have 2 degrees of financial leverage. This one gives you more leverage, right, than this one. But in both cases, you do have leverage. This is from the previous slide on long-term borrowing. All right, so here is again the harder equation for the degree of financial leverage, and again there's a base level, right? So you end up turning this into a before tax amount, right? Notice there's the tax, and this is an important statement here. So let's read this. Note that the denominator, the term 1 over 1 minus t converts the after-tax preferred stock dividend. Here's the preferred stock dividend to a before-tax amount for consistency with the other terms in the equation. So now we're all before tax, right? And you just pop in 1 number, 2 numbers, and the tax rate. And here's the interest. This is the interest on the bonds, right? So here we are going through all those numbers and popping them in, right? And you end up with a degree of financial leverage of 2.5. All right, so being that we got those 2 guys covered, now we have the total leverage, which is both what we talked about. Whoops, sorry about that. Total leverage is use of fixed costs, operating and financial, to magnify the effects of changes in sales on the firm's earnings per share. So here's an example of total leverage. And you can see now, if you go through these numbers very carefully, here is operating leverage, right? See that? Here's the degree of operating leverage, greater than 1. So we go from sales down to EBIT. And then we have the financial leverage here. We take EBIT down to earnings per share. Now, once you have these 2 numbers, life gets real easy. You just multiply these to get your degree of total leverage. Okay? So 1.2 times 5 gives you 6. But you can do it in another way. You have a change here of 300% here, and a change here of 50% here. So 300 over 50, right? And that'll give you, and then, right, 6. Or just multiply these 2, as I said. The math is not terribly difficult. So here's your degree of total leverage, right? Percentage change in earnings per share divided by the percentage change in sales. And as long as this is greater than 1, you have total leverage. So you can see here they are doing that. And again, it comes out to 6. And of course, we have a much more difficult formula. But again, it's not that bad. You just pop in some numbers here. And degree of total leverage. And again, this is at the base sales level. And you have that. And here's the numbers getting popped in. These are good examples, right? They lead you all along the way. So as I said before, if you want simple ways, if you have both of these numbers, you just multiply them, and you'll get the degree of total leverage, right? And I said it came out to 6 or something before, so that should be something to keep in mind. And there it is, right? 1.2 times 5 is 6. All right, I'll skip over the ethics. All right, I will stop here because we're about 10 minutes in, and we'll save this one. All right, talk to you for part 3.